Welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Willie. Today, I'm talking about if the hype behind Gamestop and AMC, as both stocks see some of their highest levels in short selling in almost a year. Investors are once again working up the fortitude to bet against GameStop and AMC roughly 18 months after last January's infamous meme stock short squeeze that sent GameStop shares surging over more than 1,000%. That move was so sharp that eventually it prompted Robinhood and other retail brokerages to restrict trading, a decision that prompted a congressional hearing and widespread outrage. At least one hedge fund, Melvin Capital, lost billions on its bet against GameStop, forcing it to seek an emergency cash infusion. More than a year later, Melvin decided to wind down. Although short interest is now nowhere near the exaggerated levels that preceded January 2021's historical rally, data from S3 Partners shows that short interest in both GameStop and AMC Entertainment Holdings is looking elevated, once again having reached its highest level in about a year. By comparison, shortly before the trading frenzy really kicked off 18 months ago, short interest in GameStop reportedly exceeded 100%, which is possible since shares can, in theory, be borrowed and sold short more than once. The recent rise in short interest was noted in both companies' earnings reports. GameStop reporting its earnings for the first 3 months of 2022 last week, while AMC reported last month. According to S3 Partners data, short interest is equivalent to 23% of GameStop's float. And for AMC, that figure is around 22%. Wall Street analysts who cover GameStop and AMC are generally pessimistic. Analysts expect earnings per share to contract for both stocks heading into the next fiscal year, according to the FactSet median estimate. And there's good reason for that, at least so far as GameStop is concerned. Wedbush's Michael Pachter, I apologize if I butchered that name, who has been covering GameStop since February 2002, says investors have good reason to be skeptical. He said, the fundamentals are bad with spending on new initiatives like NFT marketplaces and crypto wallets, wiping out the little bit of profits we expected them to earn from their core business. He went on to say, they lost money in the holiday quarter for the first time ever, and their cash balance declined by around $700 million over the last 3 quarters. They burned $300 million in cash in the most recent quarter, but some of that was inexplicable buildup of inventory. They don't answer questions, so we have no idea what they're really doing. GameStop shares rallied ahead of their latest earnings report, but they have drifted lower since. They are now down nearly 10% since the start of the year, while AMC shares have fallen more than 50% year to date. What do you think of GameStop and AMC? Let me know what you think below. These two companies have definitely lost some of their fuel from last year's rally, and there's always potential for another short squeeze, but I don't think we'll ever see anything as grand as 2021. But let me know what you think about the two companies below. Please don't take this video as financial advice, and thank you for watching Morris Money.